C3ai is one of the most innovative AI companies in the market right now. A lot of investors are connecting it to Palantir because of how similar the business models are and the products and services they offer. Although I will say that Palantir is at least two steps ahead of C3ai in terms of competitive advantages. Still, C3ai is making great progress. Revenue growth has accelerated for 2 straight years, and it has an absolutely pristine balance sheet. So the company delivered big news for investors, and management revealed critical insights that I think every C3ai investor should know. And I'm going to share those with you in this video here.
I want to thank the Motley Fool for sponsoring this video. Visit fool.com/parkev for the 10 best stocks to buy now.
So while the company is improving the top line, revenue growth is accelerating, the losses on the bottom line continue to mount. Operating loss for the quarter came in at 31 million, and net loss for the quarter was 22 million. But more importantly, free cash flow is positive. And the reason I say more importantly, because a business, once it turns positive in free cash flow, it can sustain itself. It doesn't need to go to investors and ask for more capital. And that's the big risk when you're looking at a company that's losing money on the bottom line. The reason it's so risky is because they're going to run out of cash and need to close down the business and file for bankruptcy. But when a business is positive in cash flow from operations and free cash flow, the business can sustain itself even if it's losing money on the bottom line. And the big difference there is non-cash expenses. And the company can maintain those non-cash expenses, as especially when those non-cash expenses are stock-based compensation, as is the case with C3ai. So long as employees are willing to continue working at the company and accept stock-based compensation as a form of compensation, then the company can continue paying the employees with that form of compensation and therefore lower the cash expense it lays out and generate positive cash flow while it grows the business, while it tries to reach profitability. And free cash flow in the quarter came in at 10.3 million compared to 18.8 million in the same quarter last year. Free cash flow for the full year was negative 44 million compared to negative 90 million for the year before. So, as I mentioned, I have talked about this a lot. I don't mind investing in a company that's losing money on the bottom line, investing in a company that's negative in free cash flow. I don't mind that. In fact, sometimes it's even more attractive. But I look for certain things from companies that are losing money. And one of those things is improvement. Do I see progress towards profitability? Do I see a good return on the capital that the management team is spending? Do I like the areas they're spending in? Do I see a good improvement in the business as it relates to money that they're spending? And with C3ai, over the last 2 years, I am seeing that. Most notably, revenue growth is accelerating and the free cash flow is improving meaningfully. One of the reasons they've been able to find success recently is expanding their distribution network and go-to-market initiatives with partners including Microsoft, Amazon's AWS, and McKinsey. Still, the company expects some moderation in their operating profit margin in the near term due to investments they're making in the business. So they have been experiencing nice improvement in their operating profit margin, even though it's negative. And they expect that improvement to slow down as they invest more in the company to serve their growth opportunity. For the first quarter of fiscal year 2026, they're forecasting revenue between 100 and 109 million. For the full year, they're forecasting revenue between 447 and 487 million. So in great news for C3ai stock investors, the management team says they expect to be free cash flow positive in the fourth quarter of fiscal year 2026 and in successive years thereafter. So that's going to be the big inflection point for C3ai is Q4 of fiscal 26, which is upcoming this year for them, this calendar year. The company's fiscal year and calendar year are not the same. And so that's why you see this difference between, they're talking about fiscal year 2026 while we're still in 2025. But the company expects free cash flow positive in Q4 26. And from that point onward, they expect to be free cash flow positive. And that will be a big improvement in the company's business. So most notably, you'll notice this is my free cash flow valuation model for C3ai. The intrinsic value per share I calculated is $33, current market price at 26. One of the biggest reasons why I have yet to rank C3ai stock as a buy is because of the risk in this business. It has a beta of a 1.99, close to 2, meaning that it's twice as risky as the average stock in the S&P 500 index. But more notably, if you recall, I want to say about a year ago, there were some question marks regarding the company's financial statements and the quality of their financial statements. Revenue recognition policies, etc., were under question. And so whenever there's question marks and uncertainty surrounding transparency of financial statements and quality of financial statements, I place a higher level of requirement before I rate a company like that as a buy. It doesn't mean I never do it, because I have done it before. Most recently, I think with Supermicro Computer, which also faced question marks surrounding the financial statements and the financial statement quality. But when their stock crashed to really low levels, and adjusting for that risk, I still recently rated that stock as a buy, but not yet with C3ai. However, that oncoming inflection point where the company potentially reaches free cash flow positive from that point onward can do a great deal in reducing the riskiness of investing in C3ai stock. I would expect its beta to drop significantly as it approaches that milestone. And as it hits that milestone, I expect the beta will decrease meaningfully. Now, something I haven't discussed yet in this video, there was an announcement yesterday that the company is searching for a new CEO. The current CEO had some medical problems, and so he feels it's best if he were to step down and find a replacement. But thankfully, the CEO is remaining on board for now and leading the search to find the replacement, and will remain on board advising the replacement. And so while that is not great news, at least it's not just an abrupt resignation and removal and absence from the company. Those are the most severe instances of leadership change that are negative for stock market investors. But when the CEO, the current CEO, is leading the search, finding a replacement, and staying on board, transitioning the company to the new leadership team, those tend to be better than when there's just an abrupt change in leadership, when the CEO just one morning says, I'm resigning, starting immediately, so and so is taking my place, see y'all later, right? Those are the most negative for investors. These types of transitions are neutral overall for investors, unless the CEO that's leaving was such a strong CEO that it's a negative just because the announcement of the current CEO leaving, because the current CEO was such a great CEO. I wouldn't rate C3ai CEO in that category. I don't think it ranks in that category. If you're curious, some CEOs I rank as being very good CEOs include Jamie Dimon from JP Morgan Chase, Dara Kashkari from Uber, Brian Niccol, now at Starbucks, formerly at Chipotle, are three really strong CEOs that I can think of off the top of my mind. I wouldn't rank the C3ai CEO anywhere in that category. So the departure of the current CEO being replaced by somebody that he will find, overall, I think will be longer term, will be neutral for investors in this company.
Hey everyone, I'm excited to announce that my book, Make Money Buying and Selling Stocks, a 6-step framework for evaluating publicly traded companies, is finally available for sale. Unlock the power of intelligent investing with my 6-step investing framework. It's a proven system designed by a university professor and a chartered financial analyst. Frustrated by the lack of frameworks that met my needs and high standards, I developed this comprehensive guide to help investors at all levels make confident and informed decisions. In this book, you learn how to assess opportunities, manage risk, and build a portfolio that works for you. No investor should dive into the market without a solid strategy, and this step-by-step framework provides you the roadmap you need. Whether you're just starting out or looking to refine your approach, this guide will empower you to take control of your financial future. I've added the link in the description below.